Good evening, everyone. Welcome back to another video. In this video, we're going to focus mostly on the training part. Before the training part, I wanted to discuss some psychology aspects, right, which we must master. First week of the training is over. Let's go on to the second week. In the second week, I know many of you are excited. I've got many messages as well. What are we going to do? We'll discuss that in detail. And before that, a very, very important question that was asked by one of the member. He asked, Sir, we were in the group for many months, right? We were in the group for many months. Why did you start training now? Why didn't you start the training before? Why didn't you give the training before? So the question is very good, and I'll give you the answer later in this video. You'll understand that. All right. So the psychology part, very simple. You heard this many, many times, and it is very true. We know that it is often said that it is 80% psychology and 20% trading. So the real trading, which happens in the entire journey of a trader, where you must focus 80% on the psychology part and 20% the real trading part, your analysis, your setup, all that. All right. So that means if trading was an exam, just for example, hypothetically, if trading was an exam, then 80% of the syllabus is psychology, correct? Then why is it mostly ignored by mainstream analysts, gurus, YouTube gurus, whatever you want to call them? Psychology part, they'll just make textbook, they'll read one textbook, they'll just make a video and post it. All right. You are expected to learn it automatically just by one video. All right. We're going to go a little deeper into this before we go into the training process for the next week. Before I describe that, you must understand what exactly is the psychological aspect you must target for the next week. All right. So let's begin with this video. The first part, there are two main emotions which control us, which is fear and greed, right? These two emotions have the power to make money for us, or else it will be the reason why we lose money in trading. All right. How do we tackle this? There's one option. The option one is completely remove emotion while trading to behave like a machine. That is actually not possible. But there is a good amount of research where all professionals, all gurus, all Western gurus as well, they tell remove emotions from your trading, emotionless trading, right? This is one option we have. Second option is given by one of the renowned trading psychologist as well as trading coach. She's a performance coach. Her name is Denise Shull. Denise Shull, DENISESHULL. Look her up, look up the videos which she posts. There's a book written also by her, right? So you can have a look at that book. Again, it's not a simple book, it is a little advanced. So basically, in this option two, where she tells that every trader has an emotional factor, all right? Every trader has an emotional factor which plays a dominant role in your trading journey. You cannot completely ignore emotions. It will always be there as soon as you take a trade, when you're taking a trade, before you take a trade, after you take a trade, there is some bit of emotion. Now, what is the general stigma that you have to remove emotions? You cannot do that because as a human, it always comes to you. So she mentions that it is a very potent, meaning it is a very strong tool we have is called emotions. That emotions itself, right? What we can do is we can control it, we can guide it like a laser missile, we can guide it like a guided missile completely. So elite professionals, the elite traders, what they do is they find the setup, they take the entry, and then they start pyramiding, right? This is like a guided missile. They wait for their attack, wait for their target, right? So this entire setup, the entire process of her trading performance is to hone the emotions, to tame it, right? It's very difficult. And what she says, what she does, it takes years of time. But the first step is to understand that it exists. Emotions are there. Okay. So why do we need to understand our emotions? Very simple. Emotions dictate our mindset. All right. Now, this mindset, what I'm talking about, is a very, very critical factor which will help us in trading, right? The mindset of the trader is different for each and every one, right? It is different for each and everyone. Everyone will look at the market differently. Everyone will wake up and the same market, suppose Nifty is going on right now, it's trading around 24,868. Some trader is looking for a buy on dip, someone is looking for a sell on rise. At same market, even billion-dollar funds, hedge funds, companies, investment firms, everyone's looking at the same chart, right? But the mindset of the traders are totally different. So we need to develop something called the growth mindset. All right. After we develop the growth mindset, we need to have an abundance mindset. Now, what is all these growth mindset, abundance mindset? You will understand slowly. Let me get into it slowly. Okay. After this abundance mindset, you will have to develop something which is called a gratitude. You are happy, you're thankful for the market, right? This is a gratitude mindset. All this, everything which I'm telling you, will only start if you have positivity. Okay. If you look at the world positively, if you have a positive mindset. So if I'm telling all this emotion, mindset, everything comes down to something called positive mindset. Is this the key? If it is the key, then we need to keep developing it. We need to keep feeding positivity. We need to fuel it. Okay. So basically, what we must develop a feedback system, a positive feedback system in our trading, meaning, yes, okay, I'm doing good today. Next, I must focus on this. All right. This is where the growth comes. Now, once you look at the positive side, growth will come. Okay. Now, growth, when it comes, then automatically you will control your fear and greed. Now, coming back to the positive mindset and the feedback, which I told you, the feedback loop we must develop. Why am I talking about this? Okay. This is directly affected by something called VAR, the value at risk. Value at risk is nothing but the total amount of money you can lose in trading from all your open positions. Your value at risk. Suppose you take 10 lots Nifty buy. Suddenly in Bank Nifty, same time you're taking some trade. Somewhere in equity you're taking some trade, right? Option. Somewhere in futures you're taking some other commodity you're taking gold buy. So all these positions combined, your current value at risk, okay, is directly affecting your mindset. Okay. If you take a loss somewhere, you will think about recovering it somewhere else. If you take loss entirely, you go into a negative feedback loop. Something is wrong, something I'm not doing good, right? So it's very important to understand your value at risk. So basically, it's coming down to trading, right? Everyone says SL rakho, trading rakho, meaning keep your SL proper, keep your risk management 1%, 2%. Nobody taught this. There's no textbook which tells you have to keep your risk at 1%, 2%. This is man made. Okay. There's no other way to describe it. The best way, okay, the best way I told you to keep a stop loss, the real meaning of stop loss, which you will discover future in your journey, is the amount of money you can lose on a trade, right? And go home and sleep properly in night, right? Very simple. Your mental peace must not be disturbed. That is the meaning of your real stop loss. So right now we discussed what? We discussed fear and greed. We discussed growth mindset is very important. For the growth mindset, you need a positive feedback in the mind. To have a positive feedback in the mind, you need to control your risk in the market. Okay. All of them are connected one by one by one. Now, let me just take a random example, right? Let's take an example in the market of the general participants, right? The market participants who all come. So let's say there's one category where there is a salaried trader who has a salaried, who's salaried, and he gets 25,000 to 50,000 per month. His margin is 50,000 rupees. Trading margin. He comes to the market. I want to earn money from the market, and my margin is around 50,000. Next category, little bit higher. A higher salary person comes, suppose 2 lakhs and above per month. He earns 2 lakhs and above per month. His margin, let's say, is 2 lakhs for trading. All right. Now, the third category. There's a third category, which is the abundant person who already has enough money. He does not need to work for money. passive income is there, life is set, generational wealth, all that. So he brings, let's say, capital around 10 lakhs. Okay. That is always his throwaway money. He does not know what to do. Bank pe pad raha hai, sad raha hai. Meaning it is getting rotten in the bank. He's bringing it to trading. He wants to do trading for fun. There's no other thing to do in life. Money hai, everything is there, everything is set. So his margin, let's say, is around 10 lakhs and above. It's free for him. So now, when you create a position in the market, you are taking on some risk. Meaning, when you create a position, there is some risk involved in the market. Now, for these three traders, what is the real value at risk for each trader? Let's discuss that. The abundant trader, the first, the wealthiest one, the everyone, he has set everything, right? Life is set. If he loses that 10 lakh margin which he bought for trading, it is no issues for him. He'll carry on with life. All is well, all is good, right? He goes on with life, no problem. The trader with 2 lakh margin, right? If he comes and he loses that 2 lakh, it's a big blow for him. Maybe his payments get issue affected, his lifestyle, maybe his food habits, he won't go, he won't travel, he'll start saving. Finally, in a few months, he'll recover everything because he has a good salary. All right. Now, the last guy, the trader with only 50,000 rupees, if he loses that, okay, if he loses that 50,000 fully, then not only his payments and lifestyle gets affected, he goes broke. He goes broke. Now, once any trader hits zero balance, not in margin, in real life, bank account mein, any trader hits zero balance, the only thing, okay, even in margin also you can say that, or bank balance, anything, the only thing that trader will think is about the mistakes he made, and he will look for one more chance to recover everything. All right. He will gather some funds. He will try again. Same thing happens. He makes some mistakes. He loses the entire margin. He finds, okay, this is what I should have done. This is the mistake I made last time. Let me go try it. Let me recover everything. This is the third time he tries. Same result. He loses everything. This is how you become an addict. You become addicted, or you become a hopeless gambler here. All right. This is the real value at risk, the money which you're putting in the market. Okay. It is not just the money, it is more than that. Your livelihood, your that 50,000 rupees, three times he lost. He could have used it somewhere else, right? He could have used in payment for his child fees, children's school fees, or whatever it may be. Okay, he could have bought something else, phone. Everything is gone now because he's become addicted. There's no way back for him. Every time he comes to the market, it will be only to recover that loss. It is not to make a good portfolio. It is not to become a better trader. Every time he takes a trade, it'll keep pricking him from the back of his mind. Improve that. So 5,000 he makes, he'll think, okay, from 50,000 loss, 5,000 recovered, so 45,000 remaining. That is the thought process which goes here, right? So what am I trying to tell you here? I am telling you here is that your absolute priority right now is to control the risk on your trade. Why? Once you control the risk on your trade, no matter what happens, there's something called ego. We'll talk about that. Once you control the risk on your trade, automatically, what did I say? The positive feedback system will start. Okay. As soon as the positive feedback system starts, you will start triggering the growth mindset. Once you trigger the growth mindset, you will start finding the mistakes you made to take that SL. Okay, that small risk you took, you made a mistake there. You will start finding your mistakes and then you will improve that. Okay, this is where your positivity comes in. So everything started from what? From controlling your risk on the trade. So over time, you do this 1 week, 2 weeks, 3 weeks, it becomes a habit. Once it becomes a habit, there's nothing that will stop you. Okay. Simple. One, something called ego. Ego is a silent killer, one of the silent killers. You cannot see it, you don't know when it will come. This ego is the one which will stop you from controlling your risk. Okay. Once you take a trade, let's say, for example, you took a trade. Okay. You're waiting for that to turn profitable or loss. It starts to trickle down slowly, loss. It has come to your risk per trade, right? That it has come down to that. Once it has come down to that, your ego will start hitting you from the back. One voice will tell, let me get out. My priority is to control my risk. I made a mistake. I accept it. I'll go on. There's a second part, second voice, the ego. It'll tell, wait, watch. Okay, fine. Another 500, another 1,000, right? Another 1%. We'll manage. No problem. No problem. No problem. We'll watch. We'll wait. So market goes up, break even again, sudden drop down loss. Now the loss is too big to bear. The only reason a person can lose or go bankrupt in the market is not to control the risk on your trade. All right. So very simple to control the risk. I hope now it's very clear for you the entire hierarchy of setups which I'm trying to tell you. Control the risk on your trade. It will create a positive feedback loop, which will trigger a growth mindset. After triggering the growth mindset, you will understand your mistakes, where you're making, then you will improve. All right. This will make you a better trader. It will make you what? A profitable trader. That is all we want. Now, the entire main thing of controlling risk. When will you control the risk? Right? When will you control the risk on the trade? Only if you have a regular trade setup. Once you have regular opportunities to trade, right? If there is no trade, there's no opportunity. What is the point of even trading, right? What is the point of learning how to control risk? You can't apply it. So what you need first is the regular opportunity to trade in the market, to find setups. Okay. When you don't find the regular opportunities, and you get only one or two chances, okay, one or two chances, what happens is something called FOMO, right? It builds up. FOMO is nothing but fear of, okay, fear of missing out, fear of missed opportunities, fear of missing opportunities. You can call it whatever you want. Okay, it's some fear. This, what it happens is when you get only one or two chances over time, slowly, without regular opportunities, you take the gamble. Okay, the brain does not know when will the next trade come, so the brain triggers you. Your emotional state becomes very highly active. It will cut something called your risk per trade, your risk per week, risk per month, whatever risk plan you have. That controlling risk, the amount of willpower you put in controlling your risk, will get shattered over time, right? Because you don't have regular opportunities, you get only one. So you will try, the brain will trigger this feeling, overwhelming sense of feeling. That emotion will trigger, let me try everything here. I don't know when I'll get the next chance. All this you won't hear, your mind won't tell, but it automatically happens, right? So you go all out on this one or two chances. If you make a mistake, account wipe, correct? So FOMO is the silent disease and silent killer. This is the second most important part you must understand. Now, coming back to the main question that member asked me, why did I start training after few months, not immediately? This is the exact reason, guys. I had to kill the FOMO in you. You understand that? I had to kill the FOMO in you. And then after killing the FOMO, I had to rebuild your confidence. After rebuilding your confidence with some method, we are following what weekly time zones, right? With some method, I have to rebuild your confidence. You have what? The radar stocks every week, the same 9 stocks. Okay. For more than a month, you're seeing that our expectation, what is our expectation? To find one setup, just one setup per week. Okay. And to be honest, totally from till now, we have found 28 setups. It's been 4 or 5 weeks. Okay. We have found how many? 28 setups. I have the screenshots also. Okay. For all the charts, 28 setups. Our expectation is what? Only one setup. That's enough. Someone recently, one of the members shared the screenshot of Nifty. In these 5 or 6 weeks, only once Nifty gave 100-point move. remaining all the weeks from our time zone, Nifty gave 250 to 300 points more, right? Simple, guys. FOMO, I have killed your FOMO now. Okay. I didn't start training till I kill your FOMO. Simple as that. Slowly, when the FOMO is killed, right? Now I can say with confidence that each of you have that comfort in the mind that next week I have opportunities. Some of you are feeling very energetic, right? Like you're almost ready. Friday close, market didn't even close. I'm getting messages. I'm ready for next week. Next week I'm ready for the training part, right? I hope it's very good next week again. So the market didn't even close. You're ready for next week. You know what? The opportunities are there. Now, once I have killed the FOMO and you are 100% sure and you have belief now, no matter what happens, right? Once you're in the group, the underground traders group, you will find opportunities non-stop. Now you have opportunities. This opportunity is the time where you will learn to control your risk on each setup. What is the first week we had training? We had the first week training to find opportunities. You will get opportunities. Now you have to train to find them. You know how to apply the formula. Done. Now the second week, right? We'll discuss about that in detail. You know that setup is coming next week, right? You are going to control your risk on the each trading setup because very simple. You know, again next week after that you will find another setup. Why to waste? Why do you want to waste any money on this today setup? If you can't find it, leave it. Next week, again, we have 9 stocks. Again, we have index. Again, we have to find opportunities. Non-stop opportunities are there. Again, there are 28 opportunities from at least what I saw. Okay, if you found some more, no problem. Now, it's very simple, guys. You have completed the Elliott Wave Master Course on YouTube. You have studied the advanced concepts, which is not easy. It's very difficult, right? And now finally, you are here in the underground traders group. So if you see, if I compare this with the army, right? There's normal army when you join. Then you go to some specialized regiment, you'll have another level of training. That's the advanced concepts. Now you are in the underground traders group, a special group, meaning you're in the special forces, right? Again, when you join the special forces, you will have mandatory 1 month training, some other skills, right? So now you are in the underground traders group. And dear friends, let me tell you, your real learning starts now. Okay. You have killed the FOMO. You will control risks on each trade setup. You will create a growth mindset and you will learn from any mistakes you make and you will improve your strengths. Okay. After that, after developing a growth mindset, finally, you will control your fear and greed. These are the two main emotions in trading, right? So once you control your fear and greed, 80% of the syllabus, which I told you in the beginning, 80% trading is 80% psychology. So 80% of the syllabus is completed. It's done. What are you worried about now? Right? So now let's begin with the trading part, trading for the training for next week, right? What is the process? How do we do this? All the psychology and all this part. How do we do this? So coming to the next week drill, the first week drill was already given to you. The next week, the drill is called rewire, meaning you are going to remove all the faulty wires in you as a trader, all the cross connections, improper loose connections, everything you're going to remove, and then you're going to fix the proper ones in your trading. All right. So the first thing I want you to do